So they've been lying to you this whole time. They've been telling you the economy is strong, jobs are robust, and everything's going fine. Until now. Until now, we start to see the revisions and talks about revisions coming in for certain data points. Like, for example, inflation. It's been adjusted, seasonally adjusted, according to some metrics due to COVID or what have you, which is why you're seeing the inflation report come down, dropping significantly. And now here we have an article from Bloomberg. I'm going to link it in the description so you can read up on it. Please read this. It basically talks about the US jobs data, the revisions that are expected to come tomorrow. This is very interesting because the title of this Bloomberg article says Fed confronts up to 1 million US jobs vanishing in this revision. Now, what is this revision? What am I talking about? I thought jobs were fine. I thought there were plentiful jobs. That's what they've been telling us this whole year and last year. Jobs are fine, robust, we're adding jobs. But what happens with the data? It's not always accurate, and they need to go back, and sometimes there's data that comes in later and it's not fully into their pipeline, so they revise this data, which they're doing, and they're revising it for the prior months and a year, basically adjusting the actual figures. Now, according to this article here, it goes on to explain that these actual figures, this revision that's expected to come, is not going to look good in terms of the true health, economy, and how the job market is doing in the US. Now, let me go into this article. You can follow along in the link that I attached in the description. But it starts off to say, US job growth in the year through March was likely far less robust than initially estimated, which risks fueling concerns that the Federal Reserve is falling far behind the curve to lower interest rates. They haven't been lowering interest rates, right? Because jobs are fine, it looks totally okay, inflation's coming down. We have Powell actually talking this week in the Jackson Hole event, but with the revisions coming in saying that, hey, it's actually not looking that good, now all of a sudden you have all these Fed members start to talk about rate cuts, especially starting September of this year. But let me go on with this article and I'll explain more what I'm talking about. It says here, Goldman Sachs Group and Wells Fargo economists expect the government's preliminary benchmark revisions on Wednesday to show payrolls growth in the year through March was at least 600,000 weaker than the currently estimated, which is about 50,000 a month. The range is actually 600,000 to 1 million job losses is expected in this prelim revisions that are expected to come. And this is just the prelim number, okay? While JP Morgan Chase forecasts see a decline of about 360,000, Goldman Sachs indicates it could be as large as 1 million job losses, okay? So all of that job gains and an amazing, robust economy all of a sudden was a lie, right? And we're going to get the numbers and we're going to see it very soon. There are a number of caveats in the preliminary figure, but a downward revision to the employment of more than 501,000 would be the largest, okay, the largest in 15 years, and suggests the labor market has been cooling for longer, and perhaps more so than originally thought. The final numbers are due early next year. How convenient! We've got elections this year. We've got the prelim data coming out. We've got elections happening by November, December. We'll have an idea of where we are in terms of the new president. And by early of next year, we're going to have more of an idea of the final numbers of this jobs data. So you're going to finally know, probably by November, December, that the recession actually started long back. And we are currently in a recession. because all of a sudden the jobs number was actually weak. And all the numbers that was coming out that was telling the economy was robust and how Biden was saying economy is robust, lots of jobs, etc., was all a lie. And you're going to get that. And you're going to see more proof of that after the elections. Let the election whipsaw happen, and then you will see the truth unravel, and you will see it more, especially next year. I mean, it's quite obvious. And it's so funny because we're going to look back at all of this and we're going to say the signs were there. It's so obvious. I mean, you see it with the yield curve. You see it with the earnings that are being reported. We had Lowe's come out basically downgrading its forward guidance for the whole year. We had Home Depot also saying things, saying that consumers and homeowners are feeling the pain, the pinch of just daily necessities like shelter and food costs being higher than usual, and that's bringing down their sales. Now Walmart, on the other hand, say that, hey, we see our forward guidance doing better than expected. And we didn't think so, but hey, look, now we think that we're gonna do better because we're seeing more shoppers shopping now. Well, yeah, because you didn't Walmart say just a couple months back in its previous earnings tell us that they're seeing more high-end shoppers, the ones that have higher incomes, show up at Walmart? Yeah, more people are shopping at Walmart trying to find discounts. They're not going to be at Whole Foods or any of the more higher price grocery stores because we're in a recession. As simple as that, and we're seeing the demand get worse off here, and this is just the beginning. So moving on into this article, such figures also have potential of shaping the tone of the federal chair, Jerome Powell, like I was talking about, his speech, which is happening at Jackson Hole, Wyoming, and we're going to hear from Powell this week. Investors are trying to gain insight as to when and how much the central bank will start lowering interest rates as inflation and the job market cool. So we're probably going to get some sort of hints there. If not, then September, we'll see what happens there. So when we look at the prelim estimates in recent years, we see the prelim numbers in 2018. The revisions came out to be in 2018 positive 43,000. Then we had negative 501,000 in 2019, right before the pandemic. Then in 2020, we had negative 173,000. Then 2021, a negative 166,000. Then 2022, positive 462,000. Massive increase in the revisions. And 2023, negative 306,000. Now, again, Goldman Sachs sees 600,000 to a million decline in the upcoming count. Now, what's very interesting with all this data is that we tend to see the highest numbers in the jobs model being at the highest level right before the economy and the job market takes a turn. So we see that when the numbers are very, very high, it tends to be wrong, and we see a turnaround in the market. And when the numbers are very, very low, they're underestimated, we tend to see a turnaround again in the market. We've seen that back in 2021, 2022, when the numbers were underestimated and economy did well afterwards. And we're seeing that now with numbers being overestimated, tends to be a turnaround there too. So pretty interesting to see how wrong the government tends to be in collecting this data and putting it out there. A large negative revision would indicate that the strength of hiring was already fading before past April, Wells Fargo economists said. That would make risks to the full employment side of the Fed's dual mandate more salient amid widespread softening in the labor market data. Okay, we heard from the Fed. Started to come out talk about, right? And these are the clues, these are the hints, right? Inflation is coming down. We're still working on inflation. This is what the Fed's saying. But however, if there's a turn in the job market and something happens in the job market, we're ready to cut rates and we're ready to do something about it. Well, a year back, you were saying the economy's fine, soft landing, we're okay, but what's the worry all of a sudden with the job market there? Right? So they do have a dual mandate. They have a dual mandate of making sure inflation is at their 2% target and that the jobs are doing fine. Now, now that they've got inflation coming down with some, revisions and manipulation and what have you, if you want to believe it or not, there's a new problem now. The new problem is the job market. And definitely they're going to react if we see weakness in the job market and the unemployment rate starts to skyrocket, recession, crash, etc., etc. Yes, they're going to come and save the day. And don't worry about inflation, because when that happens, you're going to see inflation drop. You're not just going to see disinflation, you're going to see deflation, depending on the magnitude of the recession. So as it stands now, the BLS data shows the economy added 2.9 million jobs in the 12 months through March 2024, or an average of 242,000 per month. Even if the total revision is as high as a million, monthly job gains would average around 158,000. Still a healthy pace of hiring, but moderation from the post-pandemic peak. But remember, we'll know the final numbers after all the elections are done and after all of that gimmick is done. By the early of next year, we'll know more. Labor risks. Prelim revisions may reignite the debate over whether the slowdown in the labor market risks are more abrupt downshift in the economy. Employers substantially scaled back hiring in July, and the unemployment rate rose for the fourth straight month. While that contributed to 6.4 trillion global market sell-off, the S&P 500 is fully recovered. All right, so you can go move on and read into this article some more. There's an article attached in that article saying Fed's Goolsbee says the economy, labor market flashing warning signs. You're hearing from the Fed members being worried about the labor market. Now, what's also interesting is Powell, ahead of this Jackson Hole meeting, is taking in consideration of these revisions that are coming in. So it's likely you're going to hear Powell to be more on the dovish side, talking about that, yeah, we're starting to think about rate cuts because why? The job market's getting worse off. Now, last but not least, when you scroll down to the bottom of this article here, it talks about the birth-death model, okay? For most of the recent years, monthly payroll data has been stronger than the QCEW figures. Some economists attribute that in part to the so-called birth-death model, an adjustment the BLS makes to the data to account for the number of businesses opening and closing, but that might be off in the post-pandemic world. So there's a lot of this debate about the birth-death model, and you can definitely see how the birth-death model has been overstated compared to the QCEW figures. There's a chart out there which shows that the overstatement in that numbers showing robust amount of jobs versus the actual story, it's very different, because the birth-death model, how it calculates things, is that it says that when you look at the amount of businesses being started, it takes some statistical model and number, says that for every business that is being started minus the ones that are closing, those businesses that are starting, they're probably adding a lot jobs to the economy. So instead of taking an actual poll and instead of taking, tax receipts and numbers and see the actual payroll numbers, you're just taking this statistical model and projecting that for every business minus the closing, the companies that are closing, then if it's positive, the number of businesses that are out there, they're adding X amount of jobs, and therefore we add that into the number. And that could be wrong because, especially during the pandemic, a lot of businesses might have been started, especially a lot of self-employed people, and many of them probably don't have employees. They're just self-employed. And then if you take that number and double it, triple it, whatever it is, then yeah, the number is going to be looking robust and stronger. That's why you have now these revisions coming in and talk about that actually, hey, the job market numbers are probably overstated. So it doesn't match, right? The numbers from what the government's saying, what they're saying in terms of the economy is robust and doing well versus what the companies are saying during their earnings report, and showing signs of weakness in consumer spending, more credit, the yield curve, and job layoffs. Yet the government data is still showing that the economy is strong. And now you have the Fed talking about that they might start some rate cuts, and they might be a little bit worried about the job market. Right? It's not adding up. So, like I said, you will see this come into fruition more next year, especially as the truth unravels. Last but not least, this was pretty interesting. Found this on X. Basically, someone talking about the Philly Fed reports and how there was a massive drop in the full-time hiring. So, this tweet comes from Steph Pomboy, basically saying, looks like in addition to the material downward benchmark revision to last year's payroll, we can expect to see a further collapse in full-time jobs. The Philly Fed report showed a 10% drop in full-time hiring, taking the index to levels only seen twice before. That's COVID and the GFC, the Great Financial Crisis. Still believe in the soft landing fairy tale? You guys let me know. Right? So it's all there. It's all there. We're seeing the signs. It's happening. We've seen the issues with the commercial real estate situation, the banks imploding, Silicon Valley Bank. The signs are all there. The data is showing, and now it's coming out. The truth is coming out. You were lied to, as simple as that. And the truth is coming out, and eventually we're going to see things unravel more, especially after the elections. That's my prediction. And probably, when the recession has started, you're going to see that being backdated to some date or event, either this or next or last year. And they say, okay, the recession started here, and then, it got worse off here, and so on. So they're always late to all of this thing. So you let me know. Do you still believe in the soft landing fairy tale? Do you believe in hard landing? What do you guys think about all of this? Leave a comment below, subscribe, hit the like button, bell icon to be notified next video, and I'll see you guys around. Cheers. Bye.